What's up, guys? Welcome back to Zodiac Trading. So today we're gonna talk about Federal Reserve again. We're gonna talk about is Federal Reserve going to raise interest rates as aggressively as it used to do, or is Fed going to further ease the interest rate? So that's going to change the entire picture and also the scenario of our future trading strategy. So it's very crucial to understand Federal Reserve policy. So that's why we spend so much time reading and trying to interpreting Federal Reserve information, because as a macro trader, uh, given the time and enough of trading experience, you will understand the importance when it comes to understanding and correctly predict and interpreting Fed's information. You will start to understand how important that really is. So, okay, without further ado, we will continue our topic here today. So again, Treasury, the U.S. 10-year Treasury yield is hitting the newest high ever since 2007. What we're seeing is from the October 21, the yield of the U.S. Treasuries hit a fresh 15-year high on Friday. And then the entire market started to bounce back, and we're going to see the market sentiment recover, and the entire stock market would become a little bit bullish. But still, I would call it as a short break instead of instead of a proper easing, or a lot of investors like the mainstream predict that they kind of want the Federal Reserve to ease rates as soon as possible, so they can stop bleeding. They can actually stop losing a lot of money. But from my opinion, I was gonna give you a quick conclusion. I don't think that's kind of possible, and I don't think the Federal Reserve is going to further ease the interest rate any sooner. So I think the reason why the Fed is sending all these easing signal, because the Federal Reserve clearly sees there's very strong, I would say, warning signal, such as potential meltdown of credit market, and there's big things, for example, like futures markets, like for example, bond futures, especially. A lot of people are betting against the bonds, since you're seeing a lot of bond yields actually skyrocketed. For example, global investors previously were selling gilts. They were selling the British bonds. They were also selling the British sterling. That it's going to bring serious impact to our economy system, because a lot of, for example, mutual funds, pension funds, a lot of these funds, they are structured, and also they have a lot of positions, meaning they are long the bonds. They are holding a lot of bonds. But right now you have a lot of people selling the bonds. The bond price actually go lower, and in the same time, the bond yield rate actually goes skyrocketed. That's the reason why. That's all these signs are kind of worrying me in the future. And so you're seeing several contradicted kind of market signals. So a lot of people may be really confused. Therefore, I'm going to give you 3 reasons why I think the Fed is actually having a break instead of deciding to reverse its policy any sooner. First reason is because it's very clear that we are meeting, I would say, approximately most of the recession standard. and we will call this economy situation as recession, even though a lot of economists may disagree with me. But we're kind of seeing the global currency system, especially we're seeing the emerging currency. For example, we're seeing CNH, we're seeing British pounds, we're seeing, of course, we're not going to say sterling as emerging currency, but we're going to see a lot of, for example, like we're seeing Real, we're seeing Turkish lira, a lot of currency like that are suffering heavily because of the Fed's aggressive policy, because the dollar apparently strengthened, and that's creating kind of weakness for other currency system. So you're clearly having these gloomy kind of recessionary outlook of economy. You have shrinking demands, you have high energy prices. Right now, the oil prices fell to ease further. Right now, the oil price, the petrol price has been jumped back to around $90 per barrel. So we are actually not quite done with the inflation yet. And also, we're not done with the, we're calling this recession. That's because of the macro factor. That's the reason why I don't think Fed is going to ease the policy and Fed is going to change the entire direction. And so, which is the first reason why I don't really believe that Federal Reserve is going to further ease down the rate. Second reason is because I do think and I do believe that right now we are having these credit market kind of situation, as you can see from Credit Suisse. There are a lot of major banks that are involving with Archegos business. We were, if you're interested with what's really going on behind these Archegos thing, you can actually watch my previous video. I made a YouTube video explaining explaining what really happened with Archegos family office, and also have explained the connections between the Archegos and Credit Suisse. And apparently there are lots of investment banks that are hiding out there. They're cooking the books, they're hiding out the numbers. And I think Credit Suisse is not the only bank that's kind of screwed up. So with the interest rate rising, and you're going to see a lot of credit market meltdown, you're going to see a lot of financial institutions suffering. And here I'm going to point out, especially the mortgage market and also the real estate market. I think these are two most affected market sectors. So any investors who are good at investing should pay attention to these specifically two sectors. The last reason why I think Federal Reserve is not going to cut down rates any sooner is because the most important job and the most priority target for a central bank is to control inflation. So we are not going to see, from my perspective, I wouldn't say I'm 100% correct all the time, but from my humble opinion, that I think the majority, the priority of mission of central bank is to control the inflation, to suppress the inflation from skyrocketing. That means Federal Reserve is going to do whatever it takes to fix the job markets, to control the energy price, and to suppress the inflation. Otherwise, it would kind of create a kind of chaotic and turbulence kind of market situation in the future. So I don't really believe that from these three opinions and three reasons that explain why I still view market as kind of bearish. And I'm not like anytime bullish. So I believe that a lot of investors right now want to start investing and putting their money because they think the S&P is really low right now. It's 3,700, around that. But I would just advise the people who want to invest in American stock market to be patient. In this kind of market situation, you want to be patient and you want to maintain your cash position. You want to maintain a certain level of liquidity, and that's how you can say, oh, okay, the market is really kind of bottomed, and that's where you put the bets in some really good stocks. I think that would be the time, but I don't think right now we're reaching any point of having a bear market shifting to a bullish market right out of the back. But anyway, I still believe there will be, I reckon there will be a small market bounce back. But my suggestion is we have to be patient so we can actually make more potential profit, because people who enter the market with leverage right now, they would certainly, most definitely, they're going to lose a lot of money. So thank you guys for watching my YouTube channel. If you like my content, please subscribe and press that like button for me, and also click that bell button so every time when I have a latest updates, you will receive that. And you can also feel free to comment in the section below. I will try to respond as frequently as I could. So thank you guys for watching. I'll see you in the next episode. Bye.